recently the market has been volatile, especially for REITs in Singapore, is because of one main reason, and that is because the United States Federal Reserve has stopped hiking rates. This is very important because United States interest rate is being used as a reference for many countries, including Singapore. Moreover, they are expected to start cutting rates next year, and this would further help to boost REITs prices because REITs will be the more attractive rate of return assets as compared to bonds or treasury bills, because next year the rate of returns might not be as attractive as the current rate of around 4%. However, one particular REIT has had a sharp drop in price of around 10% due to a particular news, and that is Keppel DC Reit. So in this video, we'll look through the reason why there's this sharp drop in the share price, and we also have an update on the Manulife resolutions. The main reason why most of the REITs are having an increase in share price while Keppel DC Reit suddenly had a 10% sharp drop in share price was because they have a main tenant in China that is having a late payment of 48.3 million yuan, and that equates to about 9.1 million. So why is this thing a very big issue is because tenants of the 3 Guangdong DCs is required to recover this amount, and this means that it's essentially the whole asset of data centers in China for Keppel DC Reit that has a lack of payment for 1 month. We do not know what is the main reason yet, but it can be a huge concern because China assets currently holds about 7.4% of the total assets for Keppel DC Reit. And if you look at the previous results, the first 2 Guangdong data centers has actually contributed year over year of increase of 4%, with the 3rd Guangdong DC that was supposed to contribute to the revenue and the property income. We can assume that there might be a drop of 5 to 7% year over year. So if we continue to see this news article, the Reits China unit has also requested the tenant Guangdong Blue Sea Data Development to top up security deposits of 32.2 million. Although the manager has said that there is a close discussion between the companies and the installment had been paid out to October, the November payment was not being made, which resulted in the letter of demand being issued. So we do not know what is the main reason yet, and there is still no news regarding it. So if you look at their previous quarter result, they actually had a drop in share price because due to the drop in DPU that was previously announced. So the main reason was because they actually had an increase in the finance cost by 56.9% year over year. So this is very common because Keppel DC Reit had a very low cost of debt, and because once the cost of debt kicks in while they refinance, this has caused a sharp rise in their cost of debt, therefore resulting in a lower distributable income. However, the good thing is that they are still able to maintain their net property income, with their finance income still performing strong from the Guangdong coupon that was previously mentioned. So, with the Q3 distributable income at 43 million, we can actually estimate for Q4 due to this impact. And for me, I like to be more conservative, so I like to always assume a lesser value. So at a decrease of 5%, the distributable income will come in at 41 million, and that will give a distributable DPU of 2.37 cents. This will give an annualized rate of $9.72 for Keppel DC Reit. So is this value or this share price a affordable one? If you look at the share price currently, it's at $1.89 even though it dropped by 10% from $2. So this is still a very high value because to me, the dividend yield is only at 5.14% if we calculate assuming using the $9.72. Of course, historically, Keppel DC Reit has done well, and data center is an industry that is very attractive and will be expected to grow significantly for the next few years. However, buying any companies at the correct price would determine the rate of return that you can get as an investor. So this is very important to take note when it comes to buying any shares. So if you look at their cost of debt, the good thing is that they are having a very healthy level of 37.2% leverage ratio, and that is way above the cap of 50%. They have also mentioned that they have a debt headroom of 182 million before they even hit the 40%. So there's still a lot of headroom for Keppel DC Reit to play around, which is considered very safe. The good thing is that they do not have any debts to refinance for 2023. They only have a bit of debts to refinance at 2024 and 2025. This is good because this period interest rate will be higher as compared to the interest rate at the back, as we expect the interest rate to drop sooner or later. The interest coverage ratio is still at an attractive level of 5.4 times, which is much higher compared to other REITs. The net asset value, or the premium net asset value, is at 52.9% at the time of report of $2.08. So to give you a context, after this report came out during the Q3, the share price has actually dropped significantly to around $1.72 range, which would mean that the premium is at 26.4%. At the current price of $1.80 plus cents, the premium is at 36.7%. So this is a way to also gauge at what valuation do you want to pay for a premium of Keppel DC Reit. On another news, Manulife US Reit has managed to pass all 3 resolutions significantly, with the resolution 1 passing at 97.74%, second resolution at 97.55%, and resolution 3 at 98.07%. So this was also the help from the proxy advisors, which recommend unit holders to pass on the resolutions. So this is what is supposed to or will be expected to happen. With the Paul Park divestment, the leverage ratio will drop to 54% and the assets will drop to 1.7 billion. After the divestment and the loan, the leverage ratio will drop to 52.8%. However, the bad thing is that because this sponsor-lended loan has a very high cost of debt, this will cause their cost of debt to significantly increase, which means that they have to have a larger chunk of their income being paid to the interest of the debt. Lastly will be the interesting one, because this includes the Tranche 1 asset disposition. So if you have followed my video closely previously, they have categorized Tier 1 assets as the assets which has the least potential for good returns. So because of that, they have categorized 4 properties of these assets to be sold. However, my concern will be, as I said previously, this valuation currently would drop when the property year-end valuation comes in. So we will see whether after the sales of these 4 properties, can they actually achieve less than 50%, or will they be at 49.4% as stated. Thank you so much for watching. I hope this video brings about insights into what is happening with Keppel DC Reit and Manulife US Reit. If you like the video, please support the channel by hitting the like, subscribe to my channel for more videos, and comment on what are your thoughts of the recent events. Thank you and see you in the next video.